Certainly, there's a debate to be had. Let's bring in Bill Baruch and see where he stands. He's the president at Blue Line Futures. Bill, long time no chat. Good to have you on the show here on a Friday.
Thanks for having me on. It's great.
Appreciate that. So what do you think here, Bill? Are the two connected? We got this move in Bitcoin trying to break 42, right, as gold stalls out again?
I think there's more to it. I think this is more of an interest rate U.S. dollar move for gold.
Okay.
But you can't deny the fact that you've seen the cryptos move here and it's taken some win from the sales and the metals once again. I mean, we've seen them, one benefit at the cost of the other over the last year pretty steadily. So, yeah, I do agree with you that there's something there with that.
So, Bill, what's the framework you're using here to think about Bitcoin at this point? It's been such a wild year. The coiners got totally just blasted by surprise when it dropped from 60 to 30. But then everyone who thought we were going to just rip down through 30 now is looking at basically the strongest move we've had since probably somewhere between February and April on the way up to the highs.
I don't think it was too much of a surprise to see it fall down. And I had unloaded everything. I was actually just speaking, talked about it where Coinbase went public. It was sort of buy the rumor, sell the news.
Right, yeah.
And yeah.
Well, you're not like a hardcore coiner, right, Bill? You're a technical guy who follows the trend and makes sound decisions. Yeah. You're not a religious zealot, right?
No. So I was totally out of it. I've been preaching my game plan, and it's been the same thing.
Okay.
32,500 in Bitcoin, 1,800 in Ethereum. I was getting a third of what I wanted to be back into crypto. So I only have a third in. We're seeing this rally. I don't think it's going to go straight up. I haven't unloaded anything. I'm not only in Bitcoin and Ethereum. I also own Solana, which has rallied pretty nicely too on this move. I think that there is some legs here, but going off Bitcoin, 45,000, 47,000, that's going to be an area that I think is going to be a tough one to break through. Obviously, I think it's every $2,500 up. So we're running into this resistance right now, 42,500. But Ethereum has led the way, and just some news on that this week has really been the tailwind. But flipping back to gold, I think it's interest rates, and the interest rates. I think the interest rates have bottomed this week. And look back though in February when this market was, we were really worried about interest rates, and gold really took it on the chin. Bitcoin sort of ignored that. Bitcoin rallied into April. So I wonder if there's more of a connection there with interest rates and Bitcoin than it is just Bitcoin taking the sales out of gold.
I kind of think about it as Bitcoin likes reflation. If reflation is a step to hyperinflation and just the whole negative dollar collapse story that the coiners tell us. But how far can it get, Bill, when we still know the last couple months we're getting more and more Fed speakers talking about tightening things up? And we've got even the vice chair, Clarida, starting to talk taper timeline. Do you think it's for real, Bill, or is this all just a bunch of bad cops before the good cop comes out and tells us that nothing's going to change anytime soon?
Listen, I think they should start tapering now. I mean, there's really no reason. They should get this thing done and get the ball rolling while they can. You don't know where the economy is going to be in 6 months. I personally do think that we're going to see tremendous growth in the second half of the year. Obviously, a little lukewarm growth, if you will, on the second quarter. So I think a lot of that we're going to see pick up in the second half. I think interest rates bottomed. Again, a little double bottom in interest rates. But I think the big move this week was the blowout in the 10-year futures price. So the 10-year made a new high. Supposedly some hedge fund blew out of short positions there. And it all kind of happened that Wednesday morning. ADP payrolls missed. The 10-year prices spiked higher, and then you had Clarida, as you mentioned. Clarida came out, stayed that hawkish tone. You had a record-setting ISM non-manufacturing report, which then all that tumbled down. So you need some sort of capitulation. I think we got a capitulation in the 10-year, and I think the yields can really rise from here and play to that hand that the Fed is going to need a taper. I would be extremely surprised if we don't hear a taper by the Fed meeting in September. You got the Jackson Hole into this month. You got another jobs report. But, I mean, we got 2 in a row right now with near 1 million jobs, and jobs have been the component that's been missing. I do think inflation data next week is going to be a little on the softer side because the rate of change can't keep up with it. So I just can't think the Fed's going to only use a slower inflation number as the only reason they can't taper right now. I just can't imagine that.
Now, Bill, for 10 years, it seems like you're calling the bottom, this local bottom here around 1.1%. There's always the discussion about what matters more for the stock market and the high growth trades that seemingly move with rates when they get far? Is it elevation or is it speed? And this time we're starting at a higher elevation at 1.1 instead of 50 basis points. It didn't take till February to knock the stock market off its feet a little bit in that rate climb. What about this time, Bill? At what point do you think growth stocks might start to get a little shaky if we start moving with some speed higher in yield?
It's definitely the speed. And I think the interesting thing going into August, that's what really kind of worries me about gold. As a trader, I really thought gold was going to hold well. I thought they were already pricing in 1 million jobs. A lot of the banks out there, Goldman Sachs was talking about 1 million jobs. So I thought gold was going to kind of hang in there. It would just shoot through one support level after another today. But back to 10-year, what I'm looking at is we could see some speed in August or later this month. Well, you got the Treasury. If we get these infrastructure bills going, we got the debt ceiling sort of work through all this, they're going to be printing more money, and that money is going to be auctioned out here. You're going to start to see it. It's going to hit the supply, and then the 10-year more supply is going to push those prices lower. We could start to see the speed. And remember, in February, that dreaded 7-year auction, we could start seeing some of that again.
All right, a nice heads up for us on what to look for here. CPI prints, auctions as well. Bill Baruch, great convo. Have a great weekend.
Thank you, you too.
You got it. Bill's the president at Blue Line Futures.